I'm Chris Harris, Chief Investment Officer with Strategic Advisory Partners. And we felt like we want to create some content to kind of help provide clarity about what's going on in portfolios, what's going on in the markets. And we love the idea of transparency and how decisions are made. One of the things that a lot of people have seen in the news is that it feels like there's maybe a lot of volatility and almost use words like chaos when they describe what's going on. And people assume maybe their portfolios are really down and because they've seen it down or they've seen fast declines over the last several months. What we wanted to do is maybe share a little perspective on some of the changes that we've made and what difference having a system or a process makes in investments. So in early March, our system and our process indicated that we should be more defensive in our positions. And so we did position our stocks to be less aggressive and more defensive focused stocks, which was beneficial because we did see news about tariffs and the impact that had on stock prices. We are not following news. We're not really trying to get ahead of new releases of information or policy changes. We have a really systematic process in how we choose to allocate and when we should be more defensive or when it's okay to go back to a more base holding. But in early March, we became more defensive, and that ended up being good because it meant that when the news did come out about tariffs, when stocks did decline, it meant that our portfolios declined less. Over the course of April, we made further changes, and in March, where maybe we increased the holdings that we had in international stocks, which was a good thing because as U.S. stocks fell, international stocks actually were still rising. And then in April, over the course of April, we began to reallocate those as well, away from international stocks, more into things like industrial stocks, which has been good. Now, what does all that mean? The net result is it looks like over the last 6 or 8 weeks, like there's been more activity in portfolios than we typically would have assumed there would be. We have a system and a process that we follow in managing investments. Over the last 6 or 8 weeks, there's been higher volatility than is normal. What is the result of that? It means that the process we follow seems more sped up. We don't typically anticipate making trades on a daily or weekly or whatever basis, but we've definitely made trades a little bit more frequently than would be normal because we've seen the volatility of the market has been much higher than normal and has resulted in changes in our indicators even faster than normal. The benefit, though, of our reaction to those has been that when the market fell, we fell less. And as the market has increased, we've still been able to rise. The net result is the volatility that our clients experience, meaning like how much their portfolio changes, has been lower than what people have seen in just buying and holding a standard portfolio, while at the same time, many of our portfolios are actually doing better than major stock market indexes. And we've been able to do that while having less volatility in the portfolio. I've had conversations with a few clients who have mentioned that when they logged in to their portfolio, they were a little bit surprised because when they heard the news, they assumed the worst in looking in their portfolio, and then were pleased to see that it was not what they had anticipated based on what they were hearing in the news or on the radio or whatever. And so our view going forward is it's very important to follow the process. And so even when it's difficult or when news is difficult or when things can feel however they're going to feel because of conversations of this past month it's been tariffs, next month it'll be something different. But the goal is to follow the process and to be able to stick to that. And then we constantly go through the effort of reevaluating, did that work and are we doing the right things? But we stick with the process and we're pleased that it's had a positive impact. Now, if volatility remains high and changes are happening quickly, then we may continue to make adjustments faster than we would normally expect. But as things eventually will stabilize, then we'll see fewer responses from us as the markets are changing.